The stock market is shaking, sending shockwaves through the financial world as uncertainty grips investors and analysts alike. At the heart of this turmoil, tech giants are locked in a fierce battle for AI dominance, each determined to outpace the others and claim the future. This isn't just business as usual, it's a high-stakes race where fortunes can change in an instant, and the turbulence is rattling investors everywhere, from Wall Street to Main Street. Once unbeatable tech stocks are suddenly dropping, sparking panic and reminding everyone that no company is invincible, not even the industry's biggest names. The costs of leading in AI are massive, with billions spent on research, hardware, and talent. Investors are left wondering if these enormous bets will pay off, or if the risks will outweigh the rewards. Every new AI breakthrough sends rival stocks tumbling, creating a volatile, unpredictable market where fortunes are made and lost overnight. The pace of change is relentless, and the stakes have never been higher. The fight isn't just about smarter chatbots or faster algorithms. It's about controlling the next wave of innovation that will reshape entire industries, from healthcare and finance to manufacturing and entertainment. Daily market swings are the new normal, and for investors, it feels like navigating a storm with no clear map, where every decision could mean the difference between profit and loss. The path ahead is uncertain, and the tech war promises even more volatility in the months to come. Investors and companies alike are bracing for whatever comes next. Buckle up. The AI battle is just getting started, and the outcome will shape the future of technology, business, and the global economy. Tech stocks once felt like a sure bet, the kind of investment you could make and then forget about, confident that the future would only bring more growth and bigger profits. For years, the world's biggest tech companies seemed unstoppable, dominating headlines and portfolios alike. But now, the AI arms race has changed everything. Tech giants are pouring billions into artificial intelligence, racing to out-innovate each other and secure their place at the top. This relentless competition is reshaping the industry, and it's making investors uneasy. Investors are now wary, as the enormous spending on AI raises doubts about future profits. The costs are staggering, and there's no guarantee that these investments will pay off. Some fear that companies are burning through cash too quickly, chasing uncertain rewards. No one knows which company will win, making every investment feel like a risky gamble. The uncertainty is palpable, and even seasoned investors are second-guessing their strategies. A single announcement can send one stock soaring and another crashing. Volatility is exhausting and risky. News of a breakthrough or a setback can trigger wild swings in value, leaving investors scrambling to keep up. Many are realizing these stocks may have been overhyped, and the costs of the AI war are forcing a painful reassessment. The dream of endless growth is being replaced by tough questions about sustainability and real value. As investors rush to sell, prices drop further, feeding a cycle of fear. Panic selling can turn a small dip into a full-blown rout, and confidence is easily shaken. The tech sector, once a safe haven, now feels like the riskiest place to be. The mood has shifted from optimism to anxiety, and the future looks more uncertain than ever. The lesson: even the biggest names aren't immune to disruption. In fact, their size and ambition may make them even more vulnerable to sudden changes in the market. In this climate, caution is king. Investors are learning that in the world of tech, nothing is guaranteed, and sometimes, playing it safe is the smartest move of all. The AI battle isn't contained to tech, it's shaking the entire market. When tech giants stumble, suppliers and partners feel the shockwaves, causing wild swings beyond Silicon Valley. This turmoil spreads uncertainty, making businesses and consumers more cautious. The focus on AI has sucked investment away from other sectors, leaving many portfolios dangerously unbalanced. Now, as AI stocks fall, those who bet big are feeling the pain. The emotional toll is real. Watching your savings drop is stressful, and panic selling only makes things worse. The lesson: diversification matters, especially when one sector dominates the headlines. The AI fight is impacting everyone, not just tech investors. In a chaotic market, sometimes the smartest move is to step aside. Financial experts advise waiting for the dust to settle before jumping into the tech frenzy. Trying to pick the AI winner now is like catching a falling knife, risky and likely to hurt. Patience is a financial virtue. Waiting allows you to make informed decisions, not emotional ones. You don't have to chase the hottest stocks. Protecting your capital is just as important. By staying out of the fight, you're free to explore safer opportunities elsewhere. Discipline and caution now can lead to better long-term results and peace of mind. Sometimes, the best action is no action at all. Market swings are scary, but you can protect your money with a few smart moves. First, avoid panic selling. History shows markets recover and selling low locks in losses. Diversify your investments. Don't put all your eggs in the tech basket. Rebalance gradually, not in a rush. And think of your portfolio like a balanced diet. Build a cash reserve for emergencies and future opportunities. Cash gives you flexibility. Revisit your financial goals and time horizon. Long-term plans make short-term volatility less frightening. Stay calm, stay diversified, and keep your eyes on your goals. Smart, steady steps beat emotional reactions every time. While tech is turbulent, other sectors offer stability. Consumer staples, groceries, medicine, household goods are always in demand and provide steady returns. Healthcare is another safe haven. People need medical care no matter what. Utilities, electricity, water, gas offer consistent demand and often pay dividends. Look for companies with strong finances and a track record of weathering storms. Blue-chip stocks may be boring, but in chaos, boring is beautiful. Diversifying into these sectors can cushion your portfolio from tech's wild swings. Sometimes, the safest harbors are the least flashy. The AI-driven chaos feels overwhelming, but market storms are nothing new. Every generation of investors has faced moments of uncertainty, whether sparked by new technology, global events, or sudden shifts in the economy. It's natural to feel anxious when headlines are filled with volatility and fear, but remember, these periods are part of a much bigger story. Volatility is part of investing, and history shows markets recover and reach new heights. After every downturn, there's a period of renewal and growth. The market's resilience is built on decades of innovation, adaptation, and the collective optimism of investors who look beyond the present storm. Staying focused on the long term can help you weather short-term turbulence. The best move, now? Be patient, stay diversified, and avoid emotional decisions. Reacting impulsively can lock in losses and derail your financial goals. Instead, review your portfolio, make sure it matches your risk tolerance, and trust the process you've set in place. Use this time to strengthen your financial foundation. Check your mix, hold some cash, and don't take on more risk than you can handle. Talk to a trusted advisor if you need guidance, and remember that building wealth is a marathon, not a sprint. This is a learning moment. Hype fades, but discipline and long-term thinking win. Take this opportunity to educate yourself, refine your strategy, and set realistic expectations for the future. The habits you build now will serve you for years to come. AI will eventually create huge opportunities, but now is the time for caution. The technology is evolving rapidly, and while it promises to reshape industries, it's important to separate real progress from hype. Stay informed, but don't get swept up in speculation. Stay safe, stay patient, and be ready for the growth that follows the storm. Just as nature recovers after a storm, so too do markets and opportunities for those who remain steady and prepared. The future is bright for those who keep their cool and stick to proven strategies. With resilience, knowledge, and a steady hand, you can navigate uncertainty and come out stronger on the other side.